Alright, what is up? What is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream. It is Sunday, October 7th, 2018. Probably going to start saying the date for most videos from now on, just so people can kind of know when they go back through the archive and whatnot, when exactly videos were published and whatnot. I know whenever I'm looking up trading videos and whatnot, it kind of benefits you sometimes, because certain strategies and whatnot work better in certain market conditions and whatnot. There's awesome trading channels like Tasty Trade who are great about letting their traders know that up front too. So just figure it's another thing I can add that'll help the channel overall and help you guys ultimately. How's it going, Josh? Good afternoon. Clock Central Time, where I am, Central U.S. Standard Time, but I don't remember. It might be like 7. I forget the exact time. But that's kind of why I even had this chart open, because I'm not hardly going to be using Thinkorswim for this video, because as you all can see, the whole point of the video is how to trade, how you can go about doing iron condors and vertical spreads on Robinhood, the Robinhood options. I had no idea about this. First thing you'll need to do up front though, which I can't show you on the laptop because like I've already done it anyways, but you're going to go into your app. It's just easier on the app. Go into settings, go into options trading, and it'll show spreads, something about vertical spreads and whatnot, and there'll be an X by it. And what you're going to want to do is like click on it, get it activated. Pretty much it gets you boosted up to what's known as level 3. It's not a huge deal or anything. I'm pretty sure it's kind of like options trading. They pretty much approve anybody. It's just who's willing to actually do the work to actually get it activated. I guess to them that shows that you know enough about it to do the spreads and whatnot. So that's the first thing you're going to need to do first and foremost. I probably should have waited to activate mine until I did this video. I just didn't plan on it originally. Got 2 of you in here already, so that's awesome. First thing that you need to know though, if you're like totally new to like iron condors, vertical spreads, all that, most of you on this channel know I've never even like traded them, so like by all means up front, I'm still learning a whole bunch. I just really started diving in deep to iron condor specifically, but vertical spread as well. They're just a lot safer bets than just simply placing a call, placing a put, selling a call, selling a naked call, selling a naked put, which if you don't know what naked calls and naked puts are, it's pretty much just like, it's super risky for one when you're selling them, because you could end up being responsible for paying out those 100 shares at that price, if you sell a call or whatnot, naked call. And pretty much by covering it is where you're getting into your vertical spread, which we'll kind of get into a little bit here in a minute. But one thing you want to do when it comes to vertical spreads and iron condors, I mean, there's so many different terms and different ways to go about doing these. I'm just going to stick to iron condor and vertical spread for now. I'm mostly just showing you guys how you can actually do it on Robinhood for totally free. It saves you tons of money in commissions, of course, because when you're doing these, especially the iron condors, it can cost you quite a bit of money, which you always have to take into account whenever because iron condor takes like 4 contracts, like 4 legs essentially. So I mean, if your broker charges you per each leg, per each contract, whatever, I mean, it could really start adding up, where Robinhood is still totally free. So I mean, that's another check for Robinhood in my opinion. Obviously I'm sure there's still issues with it that I'll figure out along the way, and I'll obviously let you guys know. But the thing you need to know first and foremost is when you're trading iron condors and vertical spreads, more so the iron condor, I don't know, like I said, I'm still learning a whole bunch. I've watched hours of videos already about it today alone, but you want the IV to be pretty high. Like, I don't know necessarily about doing an iron condor on SPY, maybe weeklies or something like that. I don't know. Like I said, I'll definitely get into it. I'll be experimenting with it and let you guys know along the way. But so let's say you already went ahead and activated it. You went into your settings by now and you did that. What you're going to want to do is go ahead and go obviously into your trade options. It looks different on the laptop than the phone. I actually like doing it on the laptop more, but obviously when you have a full-time job, it's hard to do so. Renee, great advice. How's it going there, Renee? Thanks. Thank you. Yeah, I mean, that's what was I getting ready to say? I was getting ready to reply to your comment, but just slipped my mind. But thank you. Thanks for saying great advice. Sorry that my mind slipped on what I was going to say. But, so now you're obviously in the option chain. So what you're going to want to do, let's just start with an iron condor, just because to me it's the easiest. It's like I said, what I've been focusing on the most. So let's say you want to go, let's just say 2 weeks out, for example. So what you're going to want to do is place both a call and a put. Also on the app versus on the laptop, the app, there's a little button in the upper right hand corner that says select. It'll allow you to select multiple options versus when you just click one, it'll like pull up the one option. So you're gonna hit select, and then it'll let you select as many, make as many legs, etc. But so right now we're in the buy call. So right now Facebook is trading around just $157. So pretty much you're going to want to put these pretty decently out of the money where you don't think it's really going to get, because by doing this iron condor, you can essentially quote unquote make money by the stock just kind of bouncing. So we're going to set up our brackets, if you wish to call them that. So what I would like to do is go ahead and sell, or no, I want to buy, let's just say the 167.50, or not even that, let's just say 165. So we'll go ahead and get one of those, and you see it popped up right there. So now we're going to go ahead and sell the call that's pretty much right underneath it. So then we sell this call. So you can see right now the total credit would be $60. That's a vertical spread technically. See, call credit spread? That's technically a more bullish vertical spread technically, because you're doing calls versus puts, etc. But yeah, that would be just your basic vertical spread. So that's your call credit spread is what they refer to it as on here. So now we're going to want to do is go ahead and go over to puts, go back to buy. So now we want to buy and sell puts that are decently out of the money as well, where we know Facebook's probably not going to get this low, and for whatever reason right now it kind of sucks. They're having some glitch right now. It's been like an hour. I've reloaded it multiple times, but for some reason it's not showing any prices under 150. So for this example, we'll just go ahead and buy the 150, and then we'll sell the 152. I would like to probably go one more out of the money in all honesty, but like I said, just for this example, just to give you guys a good idea. So now you can see the total credit is 117, which is what you receive essentially. So let's say you just bought one total contract, and then you can see the price ranges a little bit, which is why it's 117. And so you do review order, and it'll tell you that you need $250 collateral. So that is the most amount of money you could lose, period, end of discussion. $250 is your quote-unquote collateral, but as long as this trades pretty much right in between our price of like 152.50 to, what do we do, like 100 and where was it? It was like 165, right? 165 or 160. So pretty much you got like a $10 to $12 range where Facebook can kind of bounce around, and the longer you hold the contract, the more you get to keep, or not more you get to keep, like the more money you make. I'll get into that in a future video, just like how it all breaks down, because I'm still learning. Like I said, I just really started diving hard into this today, and it's super interesting to me. It limits your risk by far. It's like I wouldn't say the easiest way to make money, but like it's definitely the least amount of risk out there. I mean, you're talking like 70+% chance of profit, some even 80-90% chance of profit. So I love iron condors and vertical spreads, at least what I've been reading up on so far. Iron condor, up, down, and sideways. So yeah, I mean, you can pretty much make money. The best way, from what I've kind of just seen, is the best way is pretty much kind of like I just explained. The best scenario is that it just kind of trades sideways. Like let's say we were talking about SPY, we would want it to trade right now, so like 288 or 289. So you would say have your range between 285 and 292. So as long as SPY would trade in between 285 and 292, kind of just back and forth, you would essentially just keep your $117 in a perfect world, and pretty much, I mean, that's actually a good return. That's close. That is very close. Let's get the calculator pulled up. That is very close to a 50% profit. So 117 divided by your collateral is 46, almost 47% profit. So, yeah, I mean, iron condors, it seems like, I mean, it can get a little confusing, especially if you go the whole contract and have to either roll it up or roll it down. I'm still really diving in, learning about the whole situation on if you go completely through the contract, how much money exactly you can make, all that good stuff. Like I said, the more I learn, the more I actually go and apply this stuff, the more I'll definitely be able to bring to you guys. But for now, I just wanted to at least show you guys, I mean, you can do vertical spreads, iron condors, all that good stuff. Bullish credit spreads, bearish credit spreads, which are just bullish vertical spreads versus bearish vertical spreads, etc. But yeah, I mean, like this one right here for the Facebook one, that's not bad. I mean, in all honesty, I might consider just rolling up my sleeves and getting rid of all of my SPY calls tomorrow, depending on what the market does, and overnight and then early morning, and going ahead and throwing on one of these, because only 250 collateral gets me $117 roughly. So it's really not, I mean, you could still lose money if you don't do it right, obviously, but with everything, I mean, you could lose money. But like this setup right here, you probably have 70 to 80% chance of profit. It's just the further out you go, the better chance of profit you have, but at the same time, the smaller credit you're going to receive. Because let's say I wanted to go ahead and edit this. So let's say I thought overall Facebook's probably going to go further up than down. So I would go ahead and get rid of the calls that I had. So we're going to go back to buy calls. Let's say I think Facebook's just gone down way too fast. It's probably going to bounce back up super fast, kind of like Tesla. So let's say I wanted to go ahead, instead of the 167, let's say I wanted to do the 172. So you buy that one, or no, not buy that one. Sell this one, and then you can see it brings your credit down a lot. I mean, literally you almost lost, but let's see. So we're at 66. It's going to cost you still 250. So again, you can just you can play around with the numbers, figure out what amount of credit you're comfortable with. It's just the risk versus reward thing. Like I said, if you think Facebook overall would be like going up, I'm not saying that I think it is. I haven't even hardly looked at Facebook in a week or two. But I know it's kind of been trading in a range of like 155 roughly to what, like 165. But overall, if you were bullish on Facebook, but you wanted to, again, not risk a whole bunch of money just simply buying calls or selling naked puts or whatever the case may be, you can set up Iron Condor, set your buy and sell the calls up a little further, like I said, 172, 175, and then you could also go ahead and pull in your puts too. I mean, you can just play with it to figure out what's the minimum amount of credit you want to receive for the collateral you're putting up. I mean, 66 for 250 still isn't even that bad from a profit standpoint potential. 66 divided by 250 is what? It's about a quarter or something like that. Yeah, just over 26%, 26.5% roughly. So I mean, that's still not a bad return. It just depends on what you want, how you feel about it at the end of the day. Just do your technical analysis and all that, and you should make some decent money doing iron condors for sure. Do you know when you'll be live again? I'll probably go live. It just depends, because this is my and I'm pretty much doing everything, and he's just kind of watching me and whatnot. So I'm not gonna be able to watch my trading quite as much. I mean, I'm still going to, just not quite as much. My days will probably be a little bit later this week because of that, because I mean, I'm gonna be the only one doing stuff versus last week I was with termite techs, which they hardly do anything in the fall and winter, so I had a lot of time. I was getting off at like 3 or 4 o'clock every day. Now I'm probably going to get off 5 to 6 somewhere in there this week, but I know I'm at least going to get on probably by Wednesday, I want to say. So between Monday and Wednesday I'll probably be on again. It just depends on which day I get off the earliest and whatnot, just how good or bad of a day I had, so to speak. I mean, I try to do a live video almost every single day, but Saturdays I don't tend to do one just because it's kind of, one, I'm out doing Uber Eats most of the day. Two, I watch college football half the day. And then three, obviously, there's just not really nothing going on market-wise that's worth bringing up. So occasionally, if I do, it's more of like a financial freedom, debt-free journey update, all that stuff. But I try to do one every day, so I mean, I might be on tomorrow, but like I said, it just depends. If you're in Discord, everyone in Discord knows exactly when I plan on going live. So if you're not already in Discord, definitely be sure to check it out. It's all totally free, like the groups and it's totally free. I don't charge for anything. The app doesn't charge for anything like that. But let's see. I don't do, the only thing, I mean, I don't know if you technically want to call it naked, what I do. Like, what I had been doing, how I was introduced to options, was simply just buying calls, essentially, because selling naked puts, you have to have a lot of money. Because, I mean, I'll just show you right here. Let's say you wanted to, let's just go ahead and get rid of all this. Just to show you an example of if you tried to, let's see here, sell a call, for example. Say you think there's no way, which when you're selling options, you're essentially collecting the premium. That's it. But like, let's say you thought there's no way Facebook's coming back up to 167 by October 19th, which is crazy, by the way, to think that, how volatile technology's been lately. But so you went ahead and did that. So see, you get $67 of credit. 67 cents equals $67 in options world. So you got one. See, you'd have to have, see, it doesn't even, yeah, you don't have enough shares. It won't even tell me the amount of money. So pretty much you need 100 times, because an options contract equals 100 shares. So you need 100 times 157 amount of money in your account on hand to be able to even execute a naked call, naked put, whatever the case may be. Because if that option were to get executed, you'd be responsible for essentially paying somebody that amount of money in Facebook shares. So 100 times 157, I mean, that's why I've never done this. Just one, it seems stupid to me, and two, it just is, because you'd have to set aside over $15,000 to receive 67 bucks. I mean, do the math on that. $67 to have to set aside, what was it, 15,700, something like that. So what, not even a 0.5% return? No, thank you. I'd be better off to just throw my money in an index fund. But that's pretty much what naked calls and naked put. Naked put would just be the opposite. But yeah, no, I don't. I just do, what I usually do is like mostly just SPY calls. So I mean, and they're down horribly right now, which is why I said I'm considering just dumping them and all my profit from last week. But live and learn. Let's see here. So let's say I wanted to go out on October 19th. So what I normally do is I do like 1.5. What I have been doing was like 1.5 to 2 week calls. Like right now, especially be the perfect time to buy just a call. So like what I would tend to do is like just do about $1 out of the money. I would go ahead, just do that. It would cost me $222. Usually goes up 10, 20, 50% within a day or two. Cover that profit. I'd make what, $100 roughly. $200 off of $222 investment. Move on. Buy a dip. Rinse, repeat over and over. I mean, I had a day last week where I made like $700 or five or seven. I don't remember, like $500 I think. But then I lost it all because I didn't even realize it, but I was just psychologically getting too cocky, buying every single dip. I used all 3 of my day trades in one day, and then I thought I was setting myself up for when I bought the sell-off at the end of the day, Wednesday. You know where that's going, Wednesday, you know how Thursday and Friday went. But I thought I was setting myself up good for a good Thursday, Friday, or at least Thursday, by buying the little sell-off that happens every single day whenever we have a green day. And then sure enough, that didn't happen. So Forex? No, I don't trade any Forex. I thought about it. I'm always learning. That's what you have to be able to do. It's not about just simply buying penny stocks, flipping them in minutes, or buy and hold forever like Warren Buffett, which you're smoking crack if you think that's all that Warren Buffett does. But short-term quick option plays, iron condors, vertical spreads, Forex, what else is there? There's futures, of course. But yeah, I'm looking at getting into like Forex and futures is what I'm really shooting for in the future, just because I mean you can literally do it at any time of day, which really suits probably most everybody in the world that has a job. Obviously, anyone that's been on my channel for more than a few hours knows that my end goal is to not have to worry about my job and from the income from this to replace my job. But that's still probably realistically 1 to 2 years out. So for the meantime, though, yeah, I would like to learn more about Forex, and I am, but I'm trying to just try to get one thing down at a time. So like now, I'm really going all in on just the iron condors and vertical spreads. And I guess I can go ahead and just show you guys like both examples of vertical spreads too, because some people might not, quite understand. Let me get a drink real quick while we're heading there. And if you guys have any issues, from what I talked about at the beginning of the stream, where you need to go into your Robinhood options and like activate level 3 or whatever so you can do spreads, vertical spreads, iron condors and all that, let me know and I'll be happy to like do a video about that for you guys. But so let's say you wanted to do a week, which I know a lot of people do these. They do weekly vertical spreads. So let's say you think Facebook, you're bullish on Facebook overall, but not like stupid bullish, of course, and you don't want to risk a lot of money. So what you would do is you would buy, let's say you wanted to, you'd start out by buying, I don't know, let's just say, sorry, buy, call, okay. Buy your $165 call, sell the next one up, which would be this. So you can see this is a call debit spread now, so that would cost you $21. It pretty much just cuts off the cost, essentially. Like you're collecting that premium. As long as it doesn't go past 167, you're fine. But you can see your chance of profit is crazy. Percent change, oh, that's just how much it's like gone up, went down, duh. But you can see your chance of profit's pretty damn good. So that would cost you $21. You're pretty much gonna make nothing but money from there. Another thing you can do, I need to go over here. Another way you can do instead of a call debit spread is do a call credit spread. I hate how you have to go back and forth with each one though. That's the only thing I can complain about with this version with Robinhood. So let's say you wanted to sell this one, buy the next one up. So now you can see it's a call credit spread. So now you're going to receive $21 worth of credit. And pretty much as long as this, because this is the one, which one did we sell? The 165, right? So yeah, so pretty much as long as it doesn't go past like 165, you're fine still. And you get to pretty much keep your premium or whatever. Now see how much this cost. One, boom. So yeah, so you still need the $250 of collateral. That's why to me, the Iron Condor is just better personally, because what do we have, like 166 credit versus 250 collateral. This one you get $21 or minimum credit, whatever, versus 250 collateral. It just depends. Everybody has their own way of doing it at the end of the day, but that's just a quick little rundown. And then obviously you just do the opposite. If you were like short on the stock, like you thought the stock was going down, you would then do puts instead. So hopefully that makes sense. If not, let me know, and I'll definitely try to clarify. How often do you use your broker? Like Robinhood, if you're meaning like Robinhood, I mean, I pretty much use them like daily. I would day trade pretty much almost unlimitedly if it wasn't for the BS PDT law rule, whatever you want to call it. But yeah, I mean, I use Robinhood pretty much every single day. The other one that I'm probably going to be using, I don't know how near term, but probably in the near future, is Tastyworks. They charge very, very, very low commissions, especially for options. It's like 50 cents per contract. So, I mean, next to nothing, essentially. Oh no, I don't even have a human broker. I mean, not that I know of. I mean, whoever runs Robinhood, I guess. But I've never even contacted a human broker before. I just do it all myself. What do they call it? Retail trader? I don't remember what the term is. But no, I've never used a human broker. That's asking for more fees from what I hear. That's asking for more fees. Let me make sure too our stream's still doing alright. If there's any issues with the stream at all, definitely let me know. But so I guess with that, that's pretty much like the quote unquote little lesson, so to speak, for the video. But also what I wanted to talk about briefly at least was just where I kind of stand overall in the market. I'm super anxious to see what's going to happen when the futures market opens back up tonight. Not so much tonight as tomorrow morning. I want to see if we can break through this resistance here around 288.50, and if we can hold it, or if we get rejected, which I really hope doesn't happen. I don't think it's going to happen. Short term bullish, long term skeptical on the market. One thing I did realize once I kind of got my mind unclouded over the weekend is I just look back at, like, well, obviously mine's a little bit of a mess, but whenever I look back at like the 3-year and zoom in a little, it almost looks like we might have double topped in this market. I really hope that's not the case. I mean, we're not even showing signs even on our 3-year chart of, like, I mean, we barely touched overbought on our RSI. Our MACD wasn't like crazy super extended either compared to back in January, but that doesn't always matter. Technicals do not always matter for sure. And I mean, even when we look at our 1 year, I mean, we're getting, I mean, we could definitely drop, I think, another 5% roughly on the market before all said and done. Do I think it's going to happen? No. But do I know what's going to happen? No. I'm just trying to look at it from every perspective. I saw somebody point out that the market might be double topping, especially when you look at the 3-year 1 week chart, and I could definitely see what they were talking about. Just because we broke the all-time high, the January all-time high, doesn't mean that, like, well, no, there's no way it's a double top. Double tops are rarely ever 100% perfect. The one thing we do have going for us is that we held the all-time high pretty well as a support on Thursday, or on Friday, I mean, sorry. That's a good sign. You can see where I drew out every support and future resistance, which is why I said I'm pretty anxious to see if we can hold 288.50, which is on the SPY, which is Spider ETF of S&P 500, of course. For those of you that don't know, pretty much goes hand in hand with S&P 500. But if we can overnight, if we can get above 288.50, hold it. I like our chances on reaching 290 tomorrow, and then 290 probably acting as a resistance somewhere around 290. It doesn't have to be exactly 290, but pretty close. It's going to act as the next pretty strong resistance. I mean, the market has been super volatile of late, super painful if you're on the side I'm on, but you live and learn. You learn not to use 90% of your account on one trade, that's for sure. Just got too cocky, didn't even realize. That's the thing, like I'm on, maybe go out on a date or something with my girlfriend, or treat myself to some ice cream, something, I don't know, just kind of celebrate the profits I made, because I mean, I was up over 100% on the week by like Wednesday, and literally gone, and I didn't even realize I was getting cocky. I mean, I just felt like I was in a zone, buying pretty much every single dip, selling the rep. Thought I had myself set up well, and then the interest rates happened, and all that BS happened. See, this is where I started to buy, and then I bought more, and then bad, 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 bad. And I had the chance to actually sell and make up quite a bit of the losses, but I thought we were going to have a green day. I didn't see another round 2 sell-off coming. So it'll be interesting to see what happens for sure. Short term, I'm still bullish. I think we get back up to around 290, maybe even if we break 290 in between 291 and 291.50. But I think short term 290 is more realistic. But it'll be interesting to see what happens. Luckily, as far as I know, we haven't had any kind of crazy news or anything like that. I mean, we had the Supreme Court Justice Kavanaugh thing, but other than that, I mean, I didn't really hear nothing. I heard that there's a little bit of China talk, but nothing that's really been headline worthy yet, so hopefully that will remain over the next, 18 hours or so until market open. But, yeah, let me see. Let me make sure we're still doing alright on our stream. Still got 3 of you tuning in. Hopefully stream health is still doing alright. But, yeah, I guess with that being said, if there's no questions or any ticker symbols or anything you guys want me to break down, if you're wondering, for my whole iron condor and whatnot logic, what I'm looking at this week, Facebook, like I mentioned, that's one that I'm actually keeping a close eye on for a possible iron condor play this week. Another one is Apple. Apple's a little more pricey if I remember right, but Apple for sure, I'd probably have my little spread or whatever from around the 220 to 230 range. That'd probably be a weekly or bi-weekly second 2-week out play. But yeah, other than that, I'm pretty much still, those are the only 2 I'm kind of really looking at. SQ is another one. The thing you really want to focus on, like I said, you want to see the implied volatility being pretty high. I don't know what the IV is on SQ, but I'll look into it for sure too. Wow, this looks pretty similar to SPY, how it moved. But I'll be looking. Fs tend to have lower IV, which is why I said SPY is probably not the greatest play for an iron condor, but maybe for a call spread or put spread, whichever side, if you're bullish or bearish, that's probably a good play still. SPY is for that. But let me see. Yeah, I heard about that, but I mean, the market found out about that, Thursday, if I remember right? So I think that's all kind of worked its way out. I mean, let's see. Yeah, that was like Thursday, wasn't it? Wednesday or Thursday? I thought it was Thursday at the news, bro. I think the market's already kind of absorbed that. I don't think it's even going to be a huge hit personally. Anything to do with China, in my opinion, the market needs to just get the hell over it at this point. I'm sick of hearing, me personally, I'm sure tons of people all over the markets are sick of hearing the word China. Literally anytime China's brought up, the market seems to overreact time and time again. And in all honesty, it's pretty fucking annoying, because nothing has happened in, a year to 2 years where we've been talking about this whole China crap. And I know that I'm talking more trade war specifically, but this could enhance that. So anytime I hear the word China, I'm just like, fuck, we're going to have a 1 to 2 day pullback at least, because there's going to be something being said. Not that that's what caused the market to drop off this last week. That was more because of interest rates and the bond yields, all that stuff. But, yeah, I mean, I'm just sick of hearing the word China personally, because I know every time China comes up, the markets are going to pretty much fart on it. So, but I do think from that standpoint, I think something like that. Come on. Almost 233. I thought it did touch 234 though. I thought I seen that. Either way, it's like 13. It had dropped $13 off of its all-time high. And you can see, I mean, it's just stupid oversold pretty much on every chart. I use the 1 hour chart for pretty much everything, especially when it comes to options, like for 1, 2, 3, 4 week out plays. I love the 1 hour chart because it pretty much gives you good indicators, especially the MACD on when could be a possibly good time to buy, which is actually starting to indicate that. So yeah, Apple might actually be a decent play this week. So, and what I've tended to notice is Apple tends to either drag the market or put the market on its back. So that might actually be a good sign for the market, especially if it can turn around and start going green. So it'll be interesting to see what happens for sure. I mean, we had this happen just, what, a couple weeks ago, 9/13, so about a month ago. It dropped how much? From around 227 to 215.30. So it dropped 6% about a month ago, and it dropped about, how much? About 6% again whenever it had this last sell-off. So, I mean, that might be a good sign overall. I'm not saying that it's not exactly just going to start swinging. You can see it took it a while to still recover and go back up. But I think for the most part, the selling on Apple's done. Personally, I think we hit our, we hit a support right there. But, two, yeah, I think the market's absorbed it personally. So, it'll be interesting, though, to see what happens. Need Apple to do good at least tomorrow and probably Tuesday. Like I said, short term, probably first half of the week, I'm probably short term bullish on the markets overall. But I mean, right now is kind of a shaky time. We're only down. It's crazy to think that we're in quote unquote a shaky time. The market spot S&P 500 is only like 2.5 to 3% off of its all-time highs right now. So I mean, it's crazy to think that, wow, a 2% pullback. We're talking about what could happen. But you always got to think about it, because anything over a percent pullback, you start to kind of wonder, are we going to hit a little correction? What's going to happen? I mean, we are in the later stages of this bull market, so it's reasonable for everybody to think, well, is this going to be at this time? Is this going to be at this time? I think that's why we've had so much volatility, is everybody's assuming the end is near, essentially. The end of the bull market, not anything crazy, but you guys know what I mean. I mean, hell, it's been a decade bull market, so it's definitely due. It's just a matter of when, not if, of course. But yeah, with that being said, I guess I'll go ahead and wrap this video up. I don't want to take too much of your guys' time. I don't even know how long we've been live. Over half an hour now. We got 4 of you tuning in. That's awesome, of course. And I always forget to mention, but if you're new to the channel, definitely consider subscribing below. We'd love to have you here. And like I mentioned earlier, we had that totally free group. There's like 35 members in there now. It's our Discord group chat. It's down in the description box. That's by far the easiest way to reach me, get a hold of me, ask any questions. And I'm very active in there, especially when I have time to be. And they're always the first ones to know, obviously, when I'm going to go live. But yeah, with that being said, thank you guys again for all the support. I saw we're like well over 400 subscribers now, so that's awesome. We've had so much growth this year, and can't wait to just keep seeing how much more we build this community. But until next time, guys, I'll probably see you, like I said, Monday, Tuesday, for sure by Wednesday, and then obviously every Friday we have the update just how I did for the week and my take on the markets for the week. But like I said, I'll probably see you guys within the next day or so. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving some financial freedom this year. And I'll see you guys, like I said, within the next couple days. Take it easy, guys.